It's nearly the end of the first quarter, and once again, I'm joined by world-famous trader and financial pundit, Doc Holliday. And Doc, of course, is speaking to us again live from Cyprus. Good morning, Doc, from here. I guess it's good afternoon with you.
Yeah, it's lunchtime. Nice to be back, Al. Hope you're well.
I'm good, thanks. Good, thanks. Very good indeed. So before we're going to chat about a few stocks this morning, but before we do, I saw a headline on Bloomberg, in fact, on the Bloomberg website, that former rogue trader Nick Leeson is back in the game as an investigative journalist, reporter, investigator, whatever you like. And your name was also mentioned in that. Can you elaborate on that for us, Mike? Doc, rather?
Maybe it takes a rogue trader to know a rogue trader. I'm sure there's people out there that would speculate. Quite the opposite. I've known Nick for a number of years. I've also known Seth, who incorporated Red Mist a little while ago. He's an ex-Black Cube operative and kind of made his way into the public eye when he collaborated with Tom Hayes, who was involved with the LIBOR scandal. Those guys have been working on a number of projects. I think collectively we've been sort of discussing the fact that as we've moved out of COVID and certainly now 2023, there's a bit of a wake of businesses that perhaps, due to the circumstance at the time, not being that compliant and not being perhaps playing fairly, and there's a wake of disruption in its path, and I think more of that's starting to come out when we read some of these announcements in the morning. We're starting to see, these situations where you sort of quiz yourself and say, how's that guidance not being met so far afield, and the numbers now starting to get skewed, and we just, we collectively believe that there's an opportunity here. We've been approached by a variety of different companies and institutions, should we say, and we believe that this would be a good time to collaborate. So I think that's all I really want to say on it right now. I think there'll be a few people surprised at the length and depth of some of the analysis that we conduct, and hopefully some of that will make its way to the surface in due course. But yeah, certainly interesting times, and yeah, great to be working with Nick and Seth. Good group, good people.
Excellent. Well, that's good to know, and I think it is important to have a good look, I think, at some of the activities and transactions that take place within the market, and the damaging effect that they can have on stocks, of course, and of course companies and chief execs and their livelihoods per se. But we're going to talk about stocks today, of course. Doc, we're looking at Versarion first of all. VRS, of course, currently trading at about 4p. Now, of course, I covered Versarion in a couple of podcasts over the past few days, and just stated my view that I believe that a campaign conducted by certain quarters of the media, which was added up to a character assassination of the chief exec, really had an overly disproportionate effect on the share price and the fortunes of the company. I work at the Sussex Innovation Centre, and we see innovative companies, innovative technology coming to market, and Versarion is one of those companies. It's a great British company, and I love the fact that, again, like so many companies at the Innovation Centre, it was founded in somebody's garage and built up to become, what could be one day a world leader. So I know you've got your views on it, Mike. What's your take?
I mean, look, my views are, Versarion traded at £250 million market cap once upon a time, and we could argue it raced ahead, it got ahead of itself, it needed to do a little bit of catching up. Perhaps, the technology then, whilst very speculative early on in its journey, needed to be proven, and maybe some of that's not worked out quite as people would have hoped. But, the government's backed it. They've done deals with some major blue chip businesses. They're still doing deals today. And look, my only comment on Mr. Ricketts is, and we've got to move past it now. What has happened, has happened. There's no point dwelling on it. Neil's been a real sort of ambassador for the business for many, many years. And I've had the pleasure of meeting him and some shareholders of the company over those years. I guess I used to bite my lip and kick myself at the fact that I'd sold shares in that company far too early. But I kept an interest in it because I was actually interested in the technology, the innovation, and some of the things that they're working on. And again, I've met the professors from Manchester University. I attended the Graphene Innovation Centre in Manchester. I've had the great pleasure of going around there, seeing the things that they're working on, and the innovation that's taking place. So I can, I've always maintained an interest in it, but it has become really, really obvious of late that there's a real collective effort to try and bring that business to its knees. And sadly, that's where it is. Neil has gone now. He remains with his PDMR duties. So for people who say, oh, he's the biggest shareholder, he'll be selling. No, he won't. He is allegedly on gardening leave, but has been, sort of notified to the market he could be and will be invited back if necessary, because the continuity and deal flow of that business is going to rely on him. If the shares in the company continue to trade at the current level, I think the business potentially can go under. I think that's motivation enough for people to start to convert and get these things over the line and, mobilize and really start to fight and tooth and nail to keep this business going. I think the numbers suggest to me that the shares need to trade higher for that to happen. I think if it was to go to the wall now, it'd have a detrimental effect on the founder and many, many other shareholders who are really, really committed to VRS because of the due diligence and research that they've done. The narrative, the negative narrative that's being promoted and pushed really, really hard is very typical of lots of companies that will see aggressive turnarounds. For every one of these companies that hits the wall and goes down, there's 3, 4, 5 companies that one would argue should never have survived but do survive and often see 3, 4, 500% returns. And I saw it with Vast Resources a few weeks ago at 0.15. It traded up between 3/4 of a penny and a penny in no time. Plexus Holdings was another one. POS. I wasn't advising people should buy them, but when you see them absolutely ironed out like that, if they can survive, they can see material uplift. The shares trade 4.5, 5 pence. This is on a binary basis, whether you like the company technology or the innovation that they present. On a binary basis, if they survive, they will not survive at 4, 5, and 6 pence. It'll be 10, 20, 30, and therefore there is the opportunity for me. I actually do believe that the technology works. I had the pleasure of going into the innovation centre with an elite level sports coach who developed some compression wear, and he sat and he met with the people in Manchester, of which the guys at VRS were one group, and they were really interested in the things they were discussing then. I'm now starting to see come into practice, and that collaboration with Umbro tells you everything. And blue chip, sorry to keep talking now, and these blue chip companies, they just don't go and promote the CTO on their website, launching this brand and technology if they didn't believe in it, and of course, if they didn't do some due diligence on the business and the people involved with it.
Exactly. My point exactly. And I totally agree, Mike. Companies like Umbro, companies like Superdry, companies like Rolls-Royce would not be so involved with Viserion if they didn't really buy into the technology. And it's that simple. We've seen this before with other smaller companies where maybe they get partway involved with a major and then the major steps away. And that tells you all you need to know. With Viserion, that hasn't happened. They're engaged. They see the technology, they see the benefits, and it's going to have a huge role to play, I believe, in the future, certainly for sportswear and also in defense and tech. So anyway, I think we've covered Viserion for now. So you mentioned some other stocks there, Doc. What else has caught your eye?
Yeah, look, and just before we move on, Alan, I don't want to keep sort of going back to Viserion, but definitely the psychology of trading. I highlighted this in the Twitter Spaces live yesterday, and there was some really good discussion with about 5 or 6 different contributors, and everybody was sort of pitching in at once. So the dynamic changed and sort of leveled up a little bit this week with the discussion. And it was more about the psychology of investors. It's become a mindset that people are now holding on to, that companies that need cash are uninvestable. If a company needs cash, the one thing that the directors have a duty to do, they have an obligation to do, is try and minimize dilution. And that is when they plan their strategy of how they're going to raise money, it's often raised around material opportunity, and whether that be on the potential drill results, or whether that be some agreement, with a technological partner, whether it be joint venture partnership, whatever it might be. So this misconception now, you can only make money in a company that's fully funded, is an absolute nonsense. If the market's totally bombed out like we've seen over recent weeks and months, if a company needs to raise cash, it's heavily motivated to minimize that dilution. So I would argue that if a company does need to raise cash in the future, then that's probably been timed in with some activity around the business. That's just a generic statement. Yeah. And the other thing is these small cap companies are listed to raise cash because the market is an incubator to help develop these businesses. So when you go out of working from a garage and through an innovation center and you make it to a listed, there's a critical requirement for companies to be able to tap the market to raise the money. The theory should be, what are they raising the money for? Where's that money being spent? And how will that impact the business? And are we adding value? And if we're adding value, you're going to see a return on your investment, a positive one. This idea that companies that need money are a no-no. I mean, honestly, I think companies that don't need money, when a business raises money, you often see them go into long periods of quiet and nothing. It almost becomes a black hole, because the directors in the company say, well, we're funded for the next 18 months or the next two years. We don't need to worry about that. We can't buy and sell our shares. Institutions happy with what we're doing. And therefore, there's an absence of activity. So, I just think because people are beaten up and the markets have been so tough, that mindset has shifted now into a really negative place. And, unfortunately, that will cause investors to lose opportunity. I just wanted to make that point, Alex. I think it's super important, and it was something we discussed heavily on Tuesday. And I thought it felt relevant at this point. So apologies for droning on too much on the subject.
Not at all. You're absolutely right. I mean, Doc, I work at the Innovation Center too, and yes, these companies need money to develop the tech to the next level. But from those companies, you will often see that 10-bagger, that multi-bagger return. As you also point out, companies that don't need money, they're cash sufficient. Yeah, they're steady earners. Perhaps they might pay a dividend. That's great, and it's important to have companies like that in your portfolio. But the real growth is going to come from companies like this that do need to raise cash, and they will raise cash to develop the product to the next phase and exponentially grow the business. That's a fact of life. And I've seen that with companies at the Innovation Center develop and grow and then move on, get taken out, and so on. And that's the cycle of development the companies go through. Anyway,
and it's difficult for people to grasp the concept. The concept is, let's go back to COVID. What happened there? The wider market's changed direction. There was a lot of sector interest, particularly around these biotech, pharma, sort of these types of testing companies, people involved in. And every one of these companies, whether it been Open Orphan at the time, AVCT, Novocyte, ODX, GenDrive, it does not matter. Every one of those companies knew that they would need to raise money when interest came back to that sector. And when it came back, they all raised money, but they all raised way more money than they ever thought they would, at much higher prices than they ever thought they'd get. That's the thing. That is the point. Now, all of these businesses knew that they've got this great technology, the great presence within certain environments within pharma and biotech sector. And suddenly, when that interest came and this, seismic shift happened, every one of them went and raised money, every single one, because they knew they needed the money. But it was about trying to strategize it and get the timing right. And a lot of them did. And like I said, they raised a lot of cash. And investors still made 5, 10, 20x on their investments, if not 50 in some cases. So, I do think it's important for people not to forget what it is we're targeting when we're looking at these small cap companies.
Absolutely. Okay, Doc, so moving on, let's look at some other companies. I know you're a fan of several. We spoke earlier about ECR Minerals, and of course, ECR, we know, have a raft of assets in Australia that they're working on and developing. And of course, they've just taken delivery of a huge new drill rig, their second drill rig, in fact, that landed in Melbourne a couple of weeks ago. It's now at their depot in Bendigo getting ready. What's your take on that?
I mean, that was a Craig Brown job, wasn't it? So he'd taken a view that he could buy a rig and ship it rather than these, insane costs of rental and hiring of a rig. And I think that was at a period where it was a lot of activity within the jurisdictions they were operating. Prices were exponentially higher. Rig counts were probably much lower or more difficult rather to procure. And he made that decision to do this. I genuinely think that one of the concepts that's been put forward is that the company will hire out the rig. We've got this rig, we can earn quite a significant amount of money from it. Let other people do the exploration. We can utilize it when required and needed. Let other people utilize the rig, and actually we can cover some of our overhead, if not all of the G&A, by doing so. I mean, that decision wasn't made by the current management team. It was made by previous management. But I actually think, in the legacy of Craig, and the shares haven't performed that well over sort of recent months or the last year. I think it's a smart move. I think it'll probably pay if they don't sell the rig. I mean, they could sell it and they could bring back a fair bit of money to the company. That covers some of the short term. We've seen them disposing of some of their properties already and generating quite a significant amount of money. So there's an opportunity to do that. That would give the company really decent and sufficient funding to go and do some of their exploration elsewhere. Or we go out there and we start hiring it out, and there's an opportunity to generate some cash. And of course, use it when required. So, I mean, my view here is if you can hire it out and then have it, at your beck and call when needed, what better way to utilize it? And it's paid for now, from what I understand. So, the costs of shipping or the accessibility of getting the rig in was a bit of a challenge, but that's now been resolved as well. So no, I mean, I like the company. I'm not massively invested. I've got a small position that I've taken. I think it was 0.62p. It did have a little run up. Seems to be, or was back at that level. Look, I think ECR, if they can get it right, they'll get it really right. And if it becomes if it goes through a full rebrand, and they decide they want to operate in Queensland and not in Victoria, and then it's out with the old and in with the new. Maybe it goes through a turbulent 6 months, but that's your absolute downside. And I think the market is pricing it at that level. We can see there's a load of interest in gold again. I mean, could we foresee some interest levels now starting to build back up around the sector, around Victoria again, around some of the assets, and perhaps the Shrewd deal that seems to have been done as well in Queensland. I mean, I think where we are right now with all of this global uncertainty, particularly with the banks, maybe precious metals is a smart place to be.
I agree. And of course, the gold price has come back up in recent weeks as a response to probably the Credit Suisse crisis more than anything else. But certainly, I think ECR do have that unique USP that they have their own rigs that they can rent out and generate extra cash. In fact, they said with Creswick, they anticipated that they could get rental income that would cover most of the Creswick exploration costs. So that's encouraging. Plus, of course, they've got the Philippines asset that they'll be sort of that they may dispose of at some point. Andrew Haythorpe did indicate that last year. But so a good space to be. And I agree. I think they're absolute where the price is now. It's absolute rock bottom. There's no premium priced in there at all. And I think the only way is up from here. But Doc, what else is?
Look, the thing to remember, Alan, at this point as well is, can the company survive? Does it have the ability to survive? And with the assets that businesses have got, it can more than survive. And therefore, is it being priced now? I think we're probably ECR around about 5-year lows or something like that. Might even be, going all the way back to the Patrick Hartford days and those guys, the Stephen Claysons. We might be even getting down to the lows when those guys were running the business a fucking decade ago. So I do think the company survives. I think they're in the right space, particularly, certainly now and in the near term, over the next sort of year or two. I don't think people suddenly lose interest in gold and decide that, cryptocurrency and banks actually the place to be. And therefore, I think it survives. I think it's got potential to do really, really well. And the management seem a decent bunch.
Super. So, Doc, we've already taken up 20 minutes so far. So what else has caught your eye?
Look, I've talked a little bit about Longboat Energy. I don't want to keep harping on about it too much, but it frustrates the hell out of me. The company come out, I think they said they'd got 9 million quid in cash, but 12.1 million of cash reserves as at the end of last year in the recent announcement. They'd already stated at the end of 2022 that they would look to commercialize their existing discoveries. The company did have the biggest exploration discovery of 2022. Seems to have gone totally unnoticed. Whether that gets disposed of for cash, whether there's a joint venture partnership of some description, whether they do an exchange for production and then use the cash flow from that, I really don't know. I think the way that Longboat's being valued right now, it's being valued as if it's an Angus Energy or one of these, United Oil and Gas, one of these sort of almost like mom and pop type businesses. I think people need to remember these guys have just won in the recent licensing round a number of different licenses, partnering in with Equinor, which is pretty much state-owned Norwegian oil and gas. They're dealing with DNO, the people who took out Faro Petroleum, the previous company that this management team listed for 800 million diluted. They've got big mainstream blue chip partnerships. They wouldn't partner with Longboat if they didn't think there was any, if there was no credibility. They wouldn't have been awarded anything in the licensing round if the Norwegian government didn't believe that these guys had capacity and capability. But it is where we are, and we're seeing other companies now, namely UPL, with some interest over in Sarawak. They're getting a real bunch of wind in their sails and still arguably undervalued. And we know that Longboat suggested they're moving to Malaysia. Why has the market got the arsehole with it? Well, someone pointed out to me the other day, they stated in the RNS that they're going to need some funding in the future. Well, they've got a nominal price of 10 pence, so they won't be issuing shares under 10 pence unless they restructure the company. And looking at how they've done business to date, I've got a funny feeling they'll probably raise money at some point, but it won't be at 8p. The market will eventually correct. And I think the shares in this company should be 18p, let alone 8p. So frustrating, but there we are. And I don't want to keep bleating on, but it seems that being long and wrong and complaining is all I can do at the moment. But that's the frustration of the market that we all have to experience and accept at times. I think there's companies like First Class Metals came to market, really got a lot of interest and have subsequently started to slope a little bit. They've got decent management, decent people behind it. There's no reason why they can't have a go with companies like Panther Metals, with Darren Hazelwood and those guys have been absolutely battered and beaten up. And look, I guess what I'm trying to do is I'm just highlighting for me that if management teams are as important as where we believe the assets are, and when we're looking to survive in difficult times, strong management team and leadership is super important. So look, for those guys, and I know you've covered Power Metals yourself a lot, and I've made this passing comment as well. When that whole situation with Johnson leaving Metal Tiger happened, I felt it was something really fishy and not right about it. In this case, I thought Paul looked particularly upset. There's clearly problems there. And at this point, certain situations and scenarios, but definitely, we're all fathers, we're all blokes together. I think you just got to wish people the very, very best of luck, and I wish Paul the best with his future. I'm sure he'll be back when he's feeling re-energized and up for it again.
Absolutely. Well, on First Class Metals, I met the management team at Mines and Money last year. And again, as you rightly say, they're a great bunch of guys. I'm, very much a shareholder in First Class. I think they're set for great things, and they've certainly delivered the promised avalanche of news. As regards Power Metal, I interviewed the new chief exec, Sean Wade, who I think is amply qualified to take over from Paul, and I think he's really hit the ground running. So I wish Paul all the very best. He's a lovely fella, and as you rightly say, Doc, we have families, we have children, and family always comes first. But go back to it again, just to say, Doc Holliday, thanks again for joining us for the March review. We'll be back again next month.
Very much appreciate it, Al. Take care.